Welcome to today's market report.
Global stocks rose and Treasury yields dipped on Monday, with major Wall Street benchmarks hitting fresh records, buoyed by a robust start to the U.S. corporate earnings season and an improving economic outlook. A large proportion of S&P 500 companies are due to report results this week, including technology heavyweights Facebook, Apple, Amazon, Microsoft, and Alphabet, which have been the drivers of the market rally this year. The Dow Jones Industrial and the S&P 500 closed at record highs on Monday as traders looked ahead to earnings reports. The number one thing is that earnings are better than expected, and what's more interesting is that as we approach the end of the year, we're going to see forward guidance being lifted, which would make the market multiple more reasonably. According to Great Hill Capital, the MSCI World Index, which tracks shares in 50 countries, rose 0.28%, while the Pan-European Stock 600 Index gained 0.07%. In choppy trading on Monday, U.S. Treasury yields were lower as uncertainty about when the Federal Reserve would raise rates to curb rising inflation weighed on market sentiment. The benchmark U.S. 10-year yield fell to 1.6325%, and last week the 10-year yield hit 1.705%, the highest since mid-May. The U.S. dollar rose from a one-month low on Monday ahead of central bank meetings and economic data coming later this week, boosted by the prospect of a tighter U.S. monetary policy. The dollar index was up 0.178% at 93.828. On Wall Street, the group of stocks with the highest gains were consumer discretionary, industrials, communication services, and technologies stocks. A string of solid quarterly earnings reports this month, including JP Morgan and Goldman Sachs, and insurer Travelers Coles Inc. have boosted market expectations. Tesla, which jumped 12.66% and breached $1 trillion in market capitalization, also provided the biggest boost to the S&P 500 and the Nasdaq. Oil prices rose on Monday and reached multi-year highs as tight global supply and strengthening fuel demand in the US and beyond supported prices. Brent crude futures gained 0.43% to $85.90 per barrel, while US WTI crude futures paired earlier gains and traded lower at 0.06% to $83.71 per barrel. Gold prices rose nearly 1% on Monday as a retreat in US bond yields and persistent worries about inflation lifted the safe haven asset ahead of major central bank meetings this week. Spot gold gained 0.85% to $1,807 per ounce. Gold futures for December delivery settled up 0.6% at $1,806.80 per ounce. Sterling rose slightly on Monday but remained within recent ranges as analysts weigh up the expectations that the Bank of England will raise rates against economic data and Brexit headlines. British Brexit Minister David Frost said on Monday that the European Union's proposals to solve the problem of trade involving Northern Ireland did not go far enough and significant gaps remained between the two sides. It would appear that the UK will continue to play rhetorical brinkmanship, holding off on triggering Article 16, while Frost tries to extract further concessions from European Commission Vice President Maros Sefcovic. Sooner or later, though, Johnson will have to make a particularly difficult decision: compromise and move on, or provoke a war the UK could well lose. Meanwhile, money markets are pricing in a rate hike by the Bank of England at its meeting on 4th of November. However, data from the UK last week was mixed, which has resulted in traders dialing back rate hike expectations so soon. For instance, business activity surveys showed improvement as the economy unexpectedly regained momentum in October, but retail sales figures were worse than expected, which has taken the shine out of the pound recently. A segment of the market likely believes that policymakers could be making a mistake by tightening policy too quickly. This leaves the pound vulnerable to the downside, given that speculators have switched to a small net long position on the pound in the week to 19th of October, positioning data from CFTC showed. Meanwhile, UK break-even inflations continue to climb. This seems to be telling us that the market believes that the BOE is falling behind the curve, according to Brown Brothers. The euro-dollar slides to 1.1630, down 0.27% on the day.
This is today's market news. Thanks for listening. We'll see you next time.